Testing. Testing. Okay, good deal. Hi, Emily. I think that, okay, good deal. Hi, Emily. I think that we are on. I think that, okay, good deal. Hi, Emily. And now I'm gonna cut out of some things. Okay, I'm actually coming on right now so that I can get you guys straight when it comes to your business return. You're getting ready to have that return done, and you're going to need perhaps some pointers. Nicholas, you waiting for my return call, okay? What? I wasn't sure we were on the schedule today. It's Thursday. Oh, it's Thursday. Okay. Okay. All right. Well, I will most definitely get back with you, okay? Um, but listen, I'm coming on right now because I want to be sure that you guys, well, I can't be sure, but I want to go ahead and give you some pointers for tax season. Okay, it's that time of day, and it's time to get your taxes done, right? And so many of you, first, I want to remind you of some particular things. If you are in myEcon and myEcon alone as your business entity, then prayerfully you have kept your $39.95 or $34.95 a month active, because each month that your business is not active, then that means that you don't get the opportunity to write those expenses off. Okay. But as soon as you became a part of the business entity, then your expenses are available for you to write them off. So I want to remind you that it's very important that you keep your monthly subscription paid for, because those subscriptions actually are a write-off. And if you have a W-2 job plus you have this business, then some of you have already experienced a significant amount of savings on your taxes. Okay. And so what I want to do today is I'm just going to go through some very basic deductions that you can look for. You should have already been in class. So you've been in class and you've been attending either your training or the company training, or you have been, you guys have been in your back office. Always, and I call it the back office. I'm old fashioned, but it's BMC Home Business Management Center. Always remember that you have that as a guide. Okay. You have that as a guide. That's why you have your whole website, is because it is a guide for you as you move through your personal financial management. Okay. Now, I'm just giving you some very basic information today. The first thing I want to talk about is gathering all of your income. And I'm going to talk as if, you know, you have other income aside from having business income. Most of you will probably you're doing double dual roles. You don't just have a business, but you have both a job or some other type of contract business and so forth. So let's talk about it. IRS wants your money, and I'm going to actually pull up an IRS document so that you will actually have that as well to look at, because you need to know that this is not just me talking, but I am giving it to you from the IRS and what is required of you. So the first thing you need to do is make sure that you collect all of your W-2s. As a tax professional, this is a no-no. Between the W-2 and 1099, people mess up their own taxes, but they will think that we mess those taxes up for them, that we cause the error. But the error is when you do not receive a copy of your W-2 form from all jobs that you have worked. And whether you have made $10, $2, $10,000, a W-2 form is issued to you. So do not make the assumption that you will not receive a W-2 form if you had a job, because I get people who saying, I ain't make that much money. Yes, you don't have to submit a W-2 form when you, it has an income level or threshold that is required for you to file on your taxes. However, if you have other income with that, it could take you over the limit and you are required to file. For instance, receiving a 1099 or having cash accrual through a business. So you have to, and if I were you, let me just throw in some little tax tips. If you are a low income earner and you have dependents, but your W-2 says that you don't have to file, don't let anybody talk you into not filing, because if you have dependents that qualify for earned income or child tax credit, then file your tax return. Okay, go ahead and file that tax and get that 2,000, 3,000, because it is your earned income credit is based on your income. So some people who have not met that income line where you have to file on their taxes, then sometimes they will just not file the taxes. And they try to give their children away, their dependents. Don't do that either. That's illegal. But particularly, I'm talking to my econers who use both of these. The next thing is the 1099. In myEcon, if you have made $600 or more, you will receive a 1099. Do not leave that 1099 out. That would be part of your business income. If you work another job, say for instance, you mowed a lawn at an established business like Walmart, Walgreens, or any other business that gives, you need to check. Don't leave your 1099s out. Those are the forms for your those are forms if you have contract work, which means that you are responsible for your own taxes. A W-2, your federal, state taxes, Medicare, Medicaid, FICA, and so forth is already deducted from your check. But in 1099, you are the responsibility of paying that liability on that amount of money that you've earned is up to you. Then there's cash accrual. These are probably a good example, maybe a hairdresser, a plumber, a cake decorator, a wedding, designs, graphic designing, so forth, and you collect cash. Let me let you know that if you collect it, if you have a business account for Venmo and for PayPal and for Cash App, then you are required. Now, this is only if you have that account set up like a business account. They're going to, and you make over $600, then you're going to get what is called a 1099K, okay, which is going to be the income. It's going to be the money that you collected on Cash App. So just know what type of Cash App, what type of account you have going on. And then anything through your hands, you should be recording it. Let me just throw this in here for good measure. I'm not bringing up the cash flow manager at this point, but that's what your cash flow manager is for, is to collect the summary of all of your income and all of your expenses so that you will possibly have those expenses are will help cover the tax liability on that insurance. Excuse me, I think someone just walked in my business. Hello? Okay, so then the next thing that you need to be concerned about, and I'm doing this because my econers, you guys have more going on than, and we don't do tax training. I'm just giving you tips, okay? If you needed to have tax counseling, you can go to my website and business counseling and shekinaservices.com, and then you can make an appointment with me and pay the fee for the counseling, okay? But the cash accrual, not only that, let me get down to dividends. You may have funds that are coming to you because you have a retirement fund or you have an investment fund. And so you are creating income from that. Do not leave that off of your tax return. You need to have that information as well. Then you may have interest dividends. You may have gambling income. Do not leave that off. If you have a W-2G form, then you get a chance to write off what you lost. Say I made $10,000. I won at least $10,000 gambling, but I lost $2,000. So that means that I can write off up to $2,000 of that $10,000 because it was a loss, but the other is going to account for my income. Then you have insurance payments. There are certain insurance payments, medical payments, because you were from the job. You may have a state income tax where you receive unemployment. And so you have an unemployment, you have Social Security. The government doesn't care. This is what they want. They want all of you. So I'm going to exit out of this right now, out of my screen over here, and I'm going to change my screen. And I'm going to go to this IRS screen. I believe I have over here. Okay, I'm gonna have to get back to it, but it's here. Let me find it for you. You see my face now, you should, and everything that's going on my laptop. Okay, so I'm showing you this from IRS. And those of you who are off your jobs, when you come back and watch this, you can comment, ask a question, and so forth. But basically, on irs.gov, you can look up non-taxable income. If you're unsure, and then you see publication 525. If you're unsure, if your income, if you're making income for working, IRS desires that you report it. Your biggest thing that you have to be concerned about is someone else reporting that income? Because if they're reporting it and you're not, then there's going to be an error and a recalculation on your tax return that you're going to be responsible for. So I would most definitely check on that. So I'm just going down just a few of the categories of income, non-taxable and taxable. It says constructively received income. You are generally taxed on income that is available to you, regardless of whether it is actually in your possession. Now, what that is talking about, say, for instance, you got a check that was written out for you for 2021, but it did not make it to you. But whoever wrote that check out, they reported it to IRS, which means you're responsible for it. It can show up next year, or in 2022, but for 2021, it's supposed to be on your tax return. And so it just behooves you homework on any type of income that you're going to receive so that you can make sure that your return is accurate. Then you have an assignment of income. That's income received by an agent for you. Is income you constructively received in the year the agent received it. This may apply, well, let me look at this example. It says you and your employer agree that part of your salary is to be paid directly to your former spouse. You must include that amount in your income when your former spouse receives it. So that may be an alimony, these type of things. That's not the spouse's income, that would be your income. So any type of income that you generated, even if it were child support. A lot of people like to say, well, you know, I gave that to child support. Excuse me, no, that was your income. I don't care if child support took it. You're responsible for that total income, even if you didn't get it. I'm sorry, y'all. I'm so sorry. And then there's prepaid income, such as compensation for future services, is generally included in your income in the year you received it. However, if you use an accrual method of accounting, you can defer prepaid income you receive for services to be performed during or before the end of the next tax year. Okay. In this case, you include the payment in your income as you earn it by performing the services. Then there's employee compensation, which is talking about your W-2 form. So we already know that that's when you go work for somebody. Your child care providers, if you provide child care, either in the child's home or in your home or other place of business, the pay you receive must be included in your income. So that's for you babysitters out there. Woo-hoo. You are considered a child provider, even if you do, okay, even if you, okay, if you do child care at home, that's income. That should be included on your Schedule C, profit and loss. If you babysit for relatives or neighborhood children, whether on a regular basis or only periodically, the rules for child care providers, guess what, apply to you. But again, remember this, be certain of who is reporting your income. Or is it that you make the report on your income? I'm just saying, hopefully you got that. Fringe benefits. Fringe benefits you receive in connection with the performance of your services are included in your income as compensation, unless you pay fair market value for them or they are specifically excluded by law. I'm gonna just keep on going. I don't want to go specifically down here. Business and investment income, that's rents from personal property. If you rent out personal property such as equipment or vehicles, how you report your income and expenses is generally determined by these two things: whether or not the rental activity is a business and whether or not the rental activity is conducted for profit. Okay, if you established it as a business or you are doing it on an ongoing basis for profit, I'm not talking about those who, you know, have not declared yourself a business or a rental. You might have a neighbor or friend that's living in a house you have, and they're just paying you some type of token, okay? Partnership income, S corporation income, royalties. I forgot to put royalties. You may receive royalties for copyrights, patents, oil, gas, singing, mineral properties, and so forth. That's taxable income. And depending on what system you use, they're going to send you a 1099-K. This is one. We've been talking, myEcon has been talking a lot about Bitcoin and all of these investments. Listen, when an investment is made with any type of virtual currency, a transaction is created. When that transaction is created, that is considered income, not when you make money from it. So you must, they're asking that you report this on your tax return. So you need to know what you're doing when you start investing, okay? Because if it generates income, then you're going to receive certain forms that are going to apply, okay? And you'll need to know. In other words, those of you who do your own taxes, you probably have seen it where that question was asked, did you have any virtual currency? And if that be the case, then that means that it's income, and that income is going to generate a tax liability. Okay, I have some classes and some things on how to work with that, but again, you would have to make an appointment on shekinahservices.com, or when you see it advertised, pay to be a part of that community, so I can share with you virtual currency and taxes and how you can actually use your business to lower the taxes on your virtual income. Okay, I'm going to stop the share and I'm going to go back over here because now I'm going to share somewhere else. Now that we talked about your income that you want to report, I actually want to now talk about the expenses that you have as far as an opportunity to write off. I'm not talking about 475 of them today. I'm just trying to get you through your tax season, because this is one in which myEcon has failed. We do a lot of talking, we do a lot of marketing, we do a lot of hoopla, but we do not handle business. I've been in this over 20 years, and I know I know the works of those who are myEcomers. We get excited about the credit repair, all of that kind of stuff, but we're not excited about the real homework that makes the difference in your income shifting. And this is what income shifting is all about here. If you can actually keep great records with your expenses and understand how to turn almost every expense into a business expense, that's income shifting. This is the part you should be getting, even though we are fancy about that credit repair. This is the part that was constructed, or where myEcon was built on. We don't still talk about that because we just about our father's business and we just get in the business. If that's your mindset, we're playing to it. But I'm telling you right now, this is income shifting. So Schedule A is still around, but you got to make a certain amount of expenses, or have a certain amount of expenses, in order for you to have the privilege of using a Schedule A. I'm going to tell you right out front that they extended the tax laws to where even if you do not itemize on your taxes, you can write off a certain amount of charitable contributions. That may be tithe and offering, that may be contributions to different centers, qualified institutions. So a couple can write off up to $600, and a single person can write off $300. So if you pay $300 in your church and you have proof, then be sure to put that on your Schedule A, and it will adjust your income. It will also adjust your state income tax. Okay. Now, these are things that will adjust your state income tax as well. Some states on the Schedule A, your medical, dental, prescription drugs, and health and care costs are deductible. Let me see, that I put it. That means medical miles. You have medical miles. You even have, and I'll talk about that. So medical miles is 19, 14, and 57 cents a mile. But 57 is for business, 19 is for medical, and I think 14 is for charitable miles. State and local income taxes or sales taxes. Actually, you guys, if you kept up, if you have a state tax, sales tax, if you kept up with every receipt for every purchase and you wrote down that sales tax from those receipts, you'd be able to write it off at the end of the year. Okay. Property taxes, mortgage interest, not mortgage payment. That's where people, I see it in your cash flow manager, where you put in your mortgage payment. Your mortgage payment is not a write-off. What is connected to the mortgage, like when you have points that you had to pay down, or you have interest that you pay on it, those things are deductible. Property taxes are deductible. Personal property taxes, such as your vehicle registration fee, inspection fee. Texas, I know, has inspections. Interest paid on certain investments. Charitable contributions, I just talked about that. So you got charitable miles, you got charitable contributions. I really don't like that donation thing if it's non-cash charitable contribution, but remember, put a number on that. Don't just get a receipt from where you have donated. You need to put a value on that. So and it needs to be donated to an organization that is recognized by the government as a true charitable source. Okay. Personal losses due to theft or casualty. It is what it is. Job-related expenses, no more. Union dues, tax preparation fees, no more home office expenses. But of course, your gambling losses. And I just told you, you would receive a W-2G form. And if you won 10,000, but your loss was 2,000, then you'd be able to write off up to $2,000 of that 10,000. Okay. Let's see. I can't go to the next slide. The next slide. Come on. There we go. Okay, so we're at the Schedule C. And so this is the thing that you can use regardless. Schedule A, you have to go above your standard deduction in order for it to make a huge difference on federal, but you can make a difference on a state return. So I still take this information from my clients. You also know that the $300 and the $600 I just talked about on your charitable contribution can still be written off. That's for these tax years that law is being enforced. Now, a Schedule C can be written off all the time. myEconers who are in business, you are going to miss it if you do not take care of your expenses. But these are some of the common tax deductions. I'm not going into the other stuff that I know myEcon has added some stuff on there. Y'all go and watch a video and get the information off the business management center. But your car and truck expenses, you can actually write off everything that has to do with your is business related and it has to do with your car. You can write it off. If you had to tint the windows, if you had to replace a window, the insurance, the tires, the mileage, if you had to recover your seats, if you got your car washed and pay for that, those are eligible expenses. What you have to do is you have to either use your standard or your actual expenses. Your standard mileage is 57 cents a mile. So if you kept up with your miles, then say you had 10,000 miles, then you multiply 10,000 times 57 cents. And that is the write-off that is available to you for your mileage. Now, when you're taking mileage, you're going to have commuter miles, personal miles, and business miles. You should be writing down your odometer reading in the beginning and in the end for your business trips. So these are things that you want to manage in your cash flow manager, because you do have a mile tracker. But I'm gonna give you some tips. Sometimes I'm off with that mile tracker. So I take a picture. I sit in my car, I take a picture of the odometer reading so I can go back and record that mileage. You have notes. I have a Samsung. So I put the mileage, I'll type it in on my notes, and then I'll go back and put it in, okay? Then you have interest on loans, interest on bank cards, interest on mortgage, interest, any of the interests that build up on, say for instance, you got a loan and you upgraded your home. A percentage of that interest on there would be a write-off, and there are possibilities that within that you would have some expenses too for your contractor and so forth that you're paying for. So you want to keep up with those records and get with a good tax professional who can show you how to iron that out and make sure you're recording that, you have your proof, and you're milking that cow, you're getting everything out of it you can. Interest on your bank card, like Visa, MasterCard, American Express. Those are bank cards. I ain't talking about Forever 21, Cato, and so forth, not unless you got that card that you just use for business clothes. And the only reason you can write those clothes off is because they cannot be street clothes, okay? You must prove that that outfit is not going to be worn out with a neighbor on a date or so forth, but this was your business attire, okay? Communications, that would include your internet service, your cell phone service, and everything connected to your cell phone, including the cell phone itself, covers, buying new power charges, and all of that is a write-off. We still have meals and entertainment. However, you must record your meals and entertainment properly in order to write that off. So you can't just walk up and have a meal with someone. You got to be discussing business, and you must record that and record the people you are with. Travel. So you have flown to Atlanta for a meeting. You flew to Ohio for another meeting. It wasn't with Mr. Ivan, but it was just happened to be with your family. So who cares? Set up a meeting and write these, and all of the expenses to that travel can be written off. Wages, okay? We're talking about children now up to 17 years old. You can pay them up to the standard deduction amount, but you must have your records together. This is not the video for that. You should already know. I'm just getting you prepared for your tax season. Those of you who have already been members and you have been doing your due diligence. Of course, there's depreciation. You can almost depreciate everything. There are some things that will be Section 178 that the total amount is written off. There are other things that will be written off over 5, 10, 20, or 30 years. So bonus depreciation, ask your tax preparer about those things and depreciate. That will be car, that's lamps, that's houses, that's land. There's certain other fixtures and so forth that can be depreciated. What about depreciating your riding lawnmower, your tractor? Why? Because it's a part of your business. You are a home-based business owner. And of course, there are some medical expenses, and you know what they are. Your co-payment, your payment, your glasses, your new teeth, uh, those type of things. Okay. So that's my moment for you. I just wanted, so if you have not gathered your records and put them in the cash flow manager, be at ease for a moment. You still have time. You have until April 15th to get those records up. I always recommend that you do them according to IRS. If you were ever asked that question, they may ask in an audit, when do you record your work records? Well, it better be within 24 hours because they require you to, if you have a business transaction, to record your records the day of the transaction. Okay. So this has been my update to you guys. I have a new associate to introduce to you all that I've been behind on putting in another level, but we are going to what? Another level. So here's what I want you to do. I want you to come back on this page. Although you may not hear me, I'm reading, but I want, if you have any questions about what I just taught, if you need, share with us your experience in gathering your documentation. If this video did anything that you didn't know was available to you, then let me know. Talk out, people. This is going to another level. So closed mouth don't get no answers. All right. God bless y'all and have a wonderful, wonderful rest of the day. I'll be back on sporadically as I get the time as we move into this tax season. Bye-bye.